money is being printed. It will be printed. Powell told you it's going to be printed at the last press conference. He says tariffs are transitory. I know Bitcoin has done pretty poorly alongside the NASDAQ and the S&P and a lot of other global stock indices, but I think that's just, investors not really appreciating that this is a fiat liquidity bonanza that's about to happen. I think Bitcoin will decouple from these and stock indices and trade alongside gold and really reflate higher as the money supply globally goes higher. By the end of the year, we're going to be swimming in fiat liquidity. And Bitcoin at 250,000, we might even be higher if we get the sort of gusher of liquidity out of the major trading blocks that I expect.
Hayes says we're entering a fiat liquidity bonanza. While Bitcoin and tech stocks may be struggling now, he believes Bitcoin will decouple from traditional indices and begin to trade more like gold, a safe haven hedge against inflation and currency debasement. He points to key price markers: Bitcoin's recent low around $76,500 and the January high of $110,000, coinciding with Trump's re-election narrative. Hayes is confident that BTC will surpass those levels, with $250,000 or more on the horizon by year's end, especially if global monetary authorities, from the US to China to the EU, all begin printing to support their governments.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
What he should be doing is tightening monetary supply. The US economy is growing very well. Stocks are down 10%, 15%, whatever, but they're at all-time highs. Record wealth for those who own financial assets. Unemployment's at 4-something%. Record all-time lows. Why is he reducing the pace of quantitative tightening? Why did he cut rates in September and December of last year? He didn't need to. The U.S. economy is perfectly fine. Real GDP growth is growing above trend. But he did it because there's a $36 trillion pile of debt that's growing exponentially. The interest cost on that debt is growing exponentially. And the main inelastic buyers, China, Japan, Germany, these exporters that Trump has basically said, take your things and go home or build your factory in America. Therefore, you don't earn any more dollars. Therefore, you can't buy any more treasuries. Then if they're not buying, then the Fed or the banks have to buy. And so Powell, he said his piece. He tried to be Paul Volcker or, the modern day equivalent. But in reality, he's just another government hack and he needs to print the money. And he basically said that at his last press conference. I'm reducing QT. Why reducing QT? Economy is fine. I might do QE for treasuries, let the mortgage-backed securities run off, take the proceeds, buy treasuries. And then he stated that when asked, my base case is tariffs, inflationary impact is transitory. The fact that he even used that word is hilarious. He got so torched the last time he used that in 2022 when inflation spiked in a transitory manner to 40-year highs. However, that just tells you that his bias is easing. His bias is let's provide money to the treasury market so that Preston and Trump, whoever is in charge, can do the policy that they want to do. And I know people think that Trump is trying to sort of, do austerity, but his plan is from a 7% deficit to a 3% deficit. His plan is not to go to a surplus. His plan is not to, on a net basis, retire treasury debt. He's going to inflate it away by growing nominal GDP growth faster than the rate at the deficit. Yes. However, this is not a Argentinian style Javier Milei. I'm going to have GDP crash by 4 or 5% because I'm removing this credit from the system. So I think, again, money is being printed. It will be printed. Powell told you it's going to be printed at the last press conference. He says tariffs are transitory. I know Bitcoin has done pretty poorly alongside the NASDAQ and the S&P and a lot of other global stock indices. But I think that's just, investors not really appreciating that this is a fiat liquidity bonanza that's about to happen. I think Bitcoin will decouple from these and stock indices and trade alongside gold and really reflate higher as the money supply globally goes higher. So 76,500, that's the low that we reached in March. The local low after we broke through 70,000 in November of last year. 110,000, that's the new all-time high that we reached on January 20th, right as Trump was being inaugurated. And so I think that we take out that next all-time high and Bitcoin continues to do very, very well. The stock market, who knows, right? I don't really do stonks. It's hard. Company earnings, evaluations, and all that kind of shit, right? All I focus on is global liquidity. I know that Bitcoin performs very, very well in a deflationary bust, which is what could happen in this situation, and that the monetary authorities in the United States and the rest of the world will provide financial accommodation to make sure the governments get funded. By when we're into the third and fourth quarter, we're going to have the United States, China, Japan, and the EU all printing money, all providing financial accommodation because, they need to safeguard the value of their government bonds. They need to make good on the promises to their electorate. And you have sort of this reorganization of the global finance and trade ecosystem initiated by Trump, but now everyone else has to react. And what the reaction is, I'm going to print money and make it okay for you. Don't worry. That's what the political answer is to Trump's tariffs, I believe. And therefore, by the end of the year, we're going to be swimming in fiat liquidity. And Bitcoin at 250,000, we might even be higher if we get the sort of gusher of liquidity out of the major trading blocks that I expect. Because all I care about is global liquidity. A recession, in my mind, is just another way for Powell and his cohorts, people at other central banks, to basically stand up on the podium and say, "Oh, recession, therefore I must print money." So great. If everyone thinks there's going to be a recession, regardless of whether it happens or not, it's just another excuse for a central banker to get up on the podium and say, "Oh, the economy is weak, therefore I must print money," because that is the Keynesian economic theory that I subscribe to.
Hayes believes we're heading toward a global revaluation of reserve assets. If the U.S. dollar is to lose its global supremacy, and Hayes argues that Trump's trade war is accelerating this process, then the world needs a new neutral reserve asset. In all likelihood, Hayes says that will be gold, not Bitcoin, at least not initially. But he still sees a scenario where Bitcoin plays a role in resetting the value of existing treasury debt. He proposes a bold mechanism. The U.S. could issue fiat-denominated bonds to buy Bitcoin at extremely high prices, thereby devaluing the dollar and the stock of existing debt. This would jumpstart a new monetary system where Bitcoin could function as a settlement layer for global trade imbalances.
So I think anytime a government holds something, they can sell it. So everyone always freaks out about XYZ government holds so much Bitcoin. Are they going to sell it? They're not going to sell it. They're going to market order, dump it. Are they going to do, how are they going to do these things? So if people support governments globally amassing these stockpiles of Bitcoin, when the politics change, and the politics always change, can't really predict these things. Then from euphoria, we're going to switch to fear of what's going to happen. When are they going to dump these things? So why, if we know this is going to happen, why are we advocating for this policy? And then I think the second thing is not that I don't like it. It's more, I think people are unrealistic. What people think in their minds is, oh, the government's going to issue some bonds, print some money, and then they're going to go and they're going to buy crypto and put it on their balance sheet, because most of the major governments in the world are deficit countries, or the largest ones in the United States that people are always looking at. It's a deficit country. They have to print something to buy Bitcoin. It's not like they have a bunch of savings that they're going to buy Bitcoin. But even still, even if you have a bunch of savings, there's lots of people in your country that are probably poor, or there's some societal problems that you could be fixing. And what you're saying is, no, we're not going to do that. We're going to buy some Bitcoin and some crypto. Now, of course, I love Bitcoin, I love crypto, but I just don't see the political optics of that being very palatable to a lot of people. So, this bunch of crypto bros are going to get rich because you bought their bags, and you've got, the poor person over here suffering, and that money could have gone to some sort of enhanced government program. I just don't think that's very smart politics. And at the end of the day, I think people are being a bit delusional as to what's going to happen. Yes, maybe if a government had already seized Bitcoin, like the United States has 200,000 Bitcoin that they seized from other people, and they say they're not going to sell it while Trump was in office, or the Republicans, or whatever, fine, I get that. But notice what Trump said, in a budget neutral fashion. So he isn't even going to print money and basically buy Bitcoin. So I'm not sure what people are really getting all excited about. I think people need to think a little bit more about, if you were a politician, was this what you really would do if you had the money printer, or if you had a pile of savings to do something with. So I think at the end of the day, apart from that one chart of rectifying global trade imbalances, Trump and Preston and his cabinet need to reduce the value of the dollar globally. They need to value massively. And I think they will at some point. And you can do it versus gold, or I think you can do it versus Bitcoin. You could do it versus both. But at the end of the day, I think if they're going to be revamping the global trade system, then the US Treasury is not going to be the reserve asset anymore. It's going to be gold. I would love to be Bitcoin, but most likely it'll be gold. And at that point, you essentially need to value the stock of treasuries versus the new neutral reserve asset. And so I propose a scheme by which you could essentially bid up the price of Bitcoin in dollars by saying, I'm going to issue fiat bonds and buy Bitcoin for people at very, very high prices and devalue the stock of treasury debt, and sort of create a new global trading architecture centered around imbalances being settled in Bitcoin. People need to recognize that decentralization is a pipe dream in a lot of these projects, and I think we were very well situated as to where Hyperliquid stands on that. I'm not really deep into their tech or not, but it looks like a duck, quacks like a duck is probably a duck kind of thing.
Yeah, apparently they made the decision in 2 minutes. And I saw some supporters saying that, oh, but there was like a real quote unquote vote and saying they just acted quickly. And everyone was like, yeah, it's because it's centralized. But anyway.
So I think, obviously at BitMEX, we dealt with a lot of the same issues on, you have a high leverage product, you have a liquid contract, and you have this big pool of money that's there to essentially protect people when traders go bankrupt. And obviously, people are going to start to try to game that system. So I just think that the developers and those in charge of Hyperliquid probably just need to read the exchange docs of every other major SEX that just copied the BitMEX model, and this will never happen again, because we face all the same issues of how do you dramatically reduce leverage as people get larger positions. How do you liquidate people in an aggressive fashion so that the liquidation fund doesn't lose any money? I think they probably need to review their margin policies a bit more carefully. And then, these smacks of centralization in a supposedly decentralized project won't really come to bear. But again, this is nothing new. If you look at some of the things that happened back in the day with BitMEX and some of the other major SEXs, we've dealt with all the same issues. There's nothing under the sun that's new here. It's just that certain people haven't really internalized those lessons, or they weren't trading back in the day when some of this stuff was going down.
Hayes weighs in on the Hyperliquid protocol and the issue of centralization. He criticizes how quickly decisions were made within the supposedly decentralized platform, just 2 minutes to implement a major decision, suggesting that it looks more like a centralized exchange in disguise. Drawing from his own experience at BitMEX, Hayes says these are not new issues. High leverage products, liquidation risks, and protective insurance funds all require robust design, and many current DeFi platforms are learning the hard way. The takeaway? Decentralization is often a pipe dream, especially when big money is at stake. Please like and subscribe.